Auditing, BDA Auditing, December 2023, question 24. Now the question reads, your new audit client, Safari Limited, began operations in 2021. Unfortunately, Safari Limited has not availed the audited financial statements for 2021 due to a disagreement with former auditor. After observing all the protocols, you proceed to audit the financial statements for the year 2022. The client uses a part-time accountant whose work is to update prime records, prepare bank reconciliations, and some aspects of the ledgers. After analyzing the records, you are able to extract the following information. So we have the cash at bank. Then this is the account for the cash at bank. We have cash in hand, balance brought down, carried down, and the transactions that occurred. We have trade receivables, balance brought down and carried down, and the transactions involving that. We have the trade payables, balance brought down, carried down, and transactions. Then we have assets and liabilities at the beginning and at the end of the year, from land at valuation all the way to 10% long-term loan. So that is what we have as assets and liabilities at the beginning and at the end. Additional information, the owners introduced additional capital by cash, of which 850 was agreed as share premium. Land is to be revalued upwards by 10 million. The following amounts have been agreed for depreciation. Building is 5 million, motor vehicle 14,600, furniture 10 million. The following adjustments are necessary. Accrued administration expense is 650. Prepaid operating expense is 21. Income tax expense is 15,600 and credit loss is 1,700. Expected credit loss on the balance is 10%. Required, prepare the audit working schedule having 5 sections of the beginning trial balance, end year trial balance, adjustments, profit or loss items, and then the statement of financial position items. Now each should have debit and credit columns, therefore total of 8 columns. So total marks were included as 20 marks. So our solution will be up here. We'll be having a solution here to adjust the format a bit. We want to include here, they wanted from the original trial balance, there was end year draft, trial balance, end year draft trial balance, the end year draft trial balance. So after clearing, we start afresh and we have added, now we have original trial balance, end year draft trial balance, a new column coming in as per the question. Adjustments, we have included this that was not required by the question, adjusted trial balance, then the profit or loss items, then the financial position items. So the first one is just the original without anything, the original trial balance using the opening balances. So the first item would be, just like what we had the other time, we have cash at bank, cash at bank. Now that will not change. The cash at bank has a balance of 5720. That doesn't change. Then ignore all those other items in the account. The second one will be cash in hand. Now cash in hand equal sign. The opening balance of cash in hand is 620. Cash in hand. From the cash in hand, move to the other item, trade receivable. Now trade receivable, the opening balance for trade receivable is 18,500. So we have 18,500 as our trade receivable, the way we had that the other time. From trade receivable, we have trade payables. Trade payable is a credit balance, and the amount for trade payable opener is 12,500. After trade payable, we move to these opening balances. You can see the opening balances that we had, so equal sign. The opening balances, these ones are not changing. Click on the land at valuation and enter, then drag down all the way to the last item. Now land at valuation, which will be a debit balance, and the land at valuation is 100,000 debit balance. Building at cost. Now the building at cost will be the one that followed, 140 as a debit balance. Accumulated depreciation for building is a credit balance, and that was given again as 15,000. That is accumulated depreciation for building. Furniture at cost, that is a debit balance. So furniture at cost is a debit balance at 100,000. That is furniture at cost. Accumulated depreciation for furniture is a credit balance. Accumulated depreciation of 25, that's a credit balance. Inventory at the beginning, that is 56,500, a debit balance. 56,500. Share capital is a credit balance, so share capital of 100,000. Then of course share premium is also a credit balance, and also the 10% loan is a credit balance. All those three are credit balance. Get the total. So you can put your total here because it will keep changing. As we do more items, the total will be changing. So don't worry about that. It will keep changing. Alt equal sum everything from top. Sum equal sign sum, then you're adding everything from top. Enter. This is 421. This other side is cost not balancing. This one will not. If you drag across, this will not. So just drag across. This is 305,500. Now the difference is retained earnings. The difference here is retained earnings. So you'll be writing up there retained earnings brought down, and this will be total debits minus total credits. Total debits minus total credits. Remember, there was an element of incomplete record in this question. Now, the total debits minus total credits, in this case, the formula will be equal sign. Click on 421, 340. 421, 340 minus summation of everything above. So minus summation of all this above here. Summation, then close bracket and enter. 115,840. The next one will be end year draft trial balance, the end year draft trial balance. And let us start viewing how that was affected, the end year draft trial balance. Now start with the cash at bank. What is the cash at bank at the end of the year? Cash at bank at the end of the year. I'm seeing an overdraft. You can see where the balance is. The side that the balance is an overdraft, 12,250. So you put this on the credit side because this is an overdraft. Opening was a bank positive balance, but closing is a negative balance. So this will be on the credit side. So the cash at bank is equal sign. Put it on the credit side because it's an overdraft. 12,250. Now cash in hand is on the debit side. The cash in hand closing cash in hand is 500. 500. Then trade receivable, or before I move to, okay, trade receivable, can adjust for trade receivable. The trade receivable balance was 2,700, debit side, 2,700, 2,700. Trade payable, credit side. So trade payable is 14,200. So payable is 14,200. Payable 14,200. Okay. So for land at valuation, it was affected by something. Land at valuation. Go to additional information number 2. It was to be revalued upwards by 10 million. So this one was to go upwards by 10 million. But before I go to those adjustments and additional information, before I go to those adjustments, I want you to bring in, so leave the adjustments, those additionals first, bring in these expenses like distribution before we go to the land at the items on the additional information. So I'm going to start with the distribution. Under cash at bank, there is distribution expense. And the distribution expense is a debit entry of how much? Under the end year draft trial balance, that will be equal sign, and you just click on distribution expense of 29,500. 29,500. Enter. 29,500. After distribution expense, there is admin. Now admin are divided into two. Equal sign. The 54,300 plus 3750. So 54,300 plus 3750. 54,300 plus 3750. That is 58,050. After that, other operating expense. Now the other operating expense will be equal sign 25,940 plus 670. Other operating expense. Then after other operating expense, we have dividends. Dividends. So the dividends. Now dividends amounted to how much? 52,000. Then after dividends, we have motor vehicle. And motor vehicle amounted to 73,000, debit, 73,000. We have the interest on loan, and this is the interest on loan. I left that out. Interest on loan amounted to debit of the end year trial balance. That amounted to 15 million. That is the 15,000, the interest on loan. Sales and purchases. So we have sales. Then below that, we have purchases. Those have been given as well. So how much were the sales on the credit side? Sales on the credit side, go to the receivables, control account, and you will see sales, 359.90. That is placed on the credit side. We also have purchases. Purchases is on the trade payable. Trade payable, you'll see purchases of 122.70. 122.70. So that is purchases. We have the two, sales on the credit side and purchases on the debit side. Affected, we want to see if land at valuation was affected. So for land, remember adjustments start from note 4. not 4 here. That is where they say the following adjustments are necessary. So 1, land is to be revalued upwards by 10 million. So land was to be revalued upwards by 10 million, which means that this question mark here means that land is going up by 10 million, by 10 million. So go to your TB, What will be the final answer for land? What will be the final answer for land? Because it was to go up by 10 million. Mm-hmm. 110. So land will be 110. The question mark means 110. 110,000. Wait. So 110, then here we have 10. Yes, fine. Then after land, the next item to be affected, check building. Did building change? Did buildings change? Buildings remained the same. So it means the end year draft building did not change. You just pick equal sign and pick what you have here as building, 140. 140. For accumulated depreciation, this one changed. That one changed to 20. So that will be equal sign. What do we have? 15 plus, that is 15 plus. Then you can click on the depreciation that you are given. You are given some depreciation of 5. That moves to 20. But we have depreciation expense. What is the amount of depreciation expense? 5, equal sign 5,000. So that is 5,000. So revaluation reserve has been added as 10. Depreciation expense has also been added as 5. Now after that, we have another item, which is another depreciation is for motor vehicle is depreciated at 14.6. So we have 14.6. Do we have accumulated depreciation for motor vehicle? Nope. Create a new one. So we'll be creating accumulated depreciation. Accumulated depreciation hyphen motor vehicle. Accumulated depreciation for motor vehicle. Accumulated depreciation for motor vehicle. The amount was 14,600. So we have 14,600 as accumulated depreciation for motor vehicle. 14,600 on the credit side. Now depreciation is increasing by plus. So increase that plus 14,600. So we pick the 14,600 from this other side. So it increases by 14,600. Now the total depreciation expense is 19,600 so far. Finally, on depreciation, we have depreciation for furniture of 10,000. So 10,000 furniture, 10,000. Go to accumulated depreciation for furniture, and this will be equal sign 25 plus. If you want, you can pick the 10,000 or you can just add plus 10,000. So we pick this 10,000. So the accumulated depreciation is 35. Then depreciation is increasing. So the depreciation for the last one, and the last one was given as, what was the last depreciation? Here it is, furniture and equipment. So furniture and equipment depreciation is 10,000. So we have 10,000 for furniture and equipment. So it means we add 10,000 to depreciation expense. So double click and just add plus 10,000, 10,000. Now the same 10,000 will be added to accumulated depreciation for furniture. In fact, I had already added that. Just add what we have, the 25,000 plus 10,000, plus 10,000. 25,000, which is this, then plus 10,000. That gives us 35,000. About depreciation and adjustment of those items. Do we have any other item to be brought? Because at the end of the day, there is also inventory which we'll be bringing on board. But I believe inventory is under, our inventory has been given as 59,600. The closing inventory is 59,600. That can just be brought. So 59,600 as our closing inventory. Okay. So anything else that requires adjustment? Remember, this is not adjusted trial balance. This is just end year draft trial balance. Will be coming in for adjustments later, then adjusted trial balance. So anything that we've not brought the closing balance, you say. A trade receivable we have, land at valuation, building we have. What else don't we have? Accumulated depreciation, furniture and equipment. What will be the balance for furniture and equipment? Was it affected? Furniture and equipment. Was it affected in what we have here, furniture and equipment? No, so it's 100. So furniture and equipment remains as it is. Just use that balance as furniture and equipment. So furniture and equipment will be the same amount that we have here. Accumulated depreciation has been adjusted. Inventory, we can use that one the way it is. The other one will be closing. I can take that to adjustments. So the closing inventory can go to adjustments. Is usually in the additional information. So opening can be the same. So just use the same opening. Share capital, was share capital affected? Was share capital affected? Share capital. So go to your question and look at number 1. The owners introduced additional capital by cash of 850. By cash, of which 850 was agreed at as share premium. So 850 is share premium. So go to the cash. We have 5850. So out of 5850, 850 is cash. So 850 is cash, which is share premium, I mean. So move this side and share capital is affected. So this will be equal sign 100,000 plus 5 million. Why 5 million? Because out of 5850, 850 is share premium. So it will be 100,000 plus 5 million to get the closing. Then share premium will be 3,000 plus 850. 3,000 plus 850, like that. 15% long-term bank loan, was it affected by anything? Nothing, so it remains as it is. So the 15% long-term bank loan is not going to change, and therefore this remains as 150. The retained earnings will remain as they are, so no adjustment. Distribution expense hizo tulishashughulikia. All those distribution expense are fine. That should that is not adjust the formulas. So simply adjust the formulas so that it moves to down, then drag across again. 831,730. So that is 831,730 balancing. just adjust the formulas to capture everything. I want to go to the adjustments part. So you will be writing here adjustments. Adjustment, and the first adjustment that I bring on board is closing inventory. So start with closing inventory. Closing inventory is divided into the one that goes to the cost of sale, and we also have a closing inventory. The other closing inventory goes to as a current asset. Current asset. So closing inventory cost of sale and closing inventory current asset. Now, the one that is a cost of sale, remember we are on adjustments, the one that is a cost of sale is credited. So closing inventory amounted to, the value for closing inventory was 59,900. So we can see 59,900, 59,900. So that is closing inventory, cost of sale. Then we have closing inventory that is a current asset. So the one that is a current asset is debited, but the one that is a cost of sale is credited. I'm done with the closing inventory, cost of sale, and closing inventory current asset. I want to move to the next part. Next part. Next part is the next adjustment. Accrued expenses. So we have accrued admin expense. Accrued admin expense. You know how we treat accrued admin expense? I'll copy that. And the accrued admin expense is 650. So just move here and write accrued admin expense. Accrued admin expense. This one is a current liability. Current liability. Current liability. And the amount is 650. Current liabilities are credit balances. 650. 650. Apart from the 650 being there, the accrued admin expense will also go to, it will be added under admin expenses here. So you move up the admin expense on the debit side, then write 650. So debit side 650 here. So you see, administration expense of 650, then on the credit side, accrued admin expense of 650. So that is done. Second, or not second, but the one that follows after accrued admin is prepaid operating, 2,100. That is a current asset. Prepaid operating, current asset. Now current asset, and you are seeing that that one is 2,100. So the 2,100 is a current asset. Here, 2,100 is a current asset. Now, prepaid expenses are deducted from the expense they relate to. So that will be deducted from prepaid operating. Put it on the credit side, 2,100. Credit side on adjustments. So it's an asset here. So current asset, but it's deducted from the expense it relates to. Prepaid operating. Now after prepaid operating, there is income tax of 15,600. Income tax of 15,600. Income tax expense 15,600. Now there is also current tax. In relation to the same, we also have current tax. Now current tax is a current liability. Current tax is a current liability. Current liability of 15,600. The current tax, the income tax, which is a liability and an expense. The other item is credit loss. This is a bad debt written off of 1,700. credit loss, unless we have credit loss up there. Did we have any credit loss? Even on our receivable, there was no credit loss at all. So credit loss amounted to 1,700. So credit loss 1,700. That will be an expense. Now bad debt is deducted from receivables. Bad debts written off are deducted from receivables. So apart from being an expense of 1,700, you also deduct this from receivables. So where are our receivables? Receivables are here. So under receivables on the credit side, you put 1,700. 1,700 receivables on the credit side. So it's an expense of 1,700 here. Then also on receivables, you put it on the credit side of 1,700. We move to the last one. And the last one is expected credit loss on balance. What they meant here on balance is that if you have receivables, then there is a balance that remains. That balance that remains, there is an allowance for bad and doubtful debts of 10%. So allowances for bad and doubtful debts of 10% on the balance. So how do you get that? We come up with the expected credit loss. Expected credit loss, also known as allowances for bad and doubtful debts, but this is carried down. Allowances for bad and doubtful debts carried down. And remember, it's 10%. This is going to be 10% on the balance. How do you get 10% on the balance? Equal sign. Now it should be on the credit side. Credit side or debit side? The formula will be equal sign, then 10%, open bracket, 10%, open bracket. What was the balance for receivables? In the end year draft? 2,700. So we are going to use 2,700. So you just write 2,700. 2,700 minus, so the balance here is 2,700 for end year trial balance minus bad debt written off, which is 1,700. So minus 1,700, then close bracket. Include times. So if you enter, the answer is 1,900. 1,900. Now with this 1,900, you also deduct it from receivable. Now remember, allowances for bad and doubtful debts is also deducted from receivables. So this will also be deducted from receivables. So you'll move up to receivables. Where you had 1,700 here, just double click. So it's equal sign. We have 1,700 plus 1,900. So it now equal sign 1,700 plus 1,900 because allowances for doubtful debts at the end of the year are also deducted from receivables. That is all for adjustments. 1,700 plus 1,900 is 36. To confirm, just drag the formulas. You can readjust them again to capture everything. Adjust them again to capture everything. Then drag across again afresh. 81,550. So this is not balancing because inventories are not tallying. This inventory is 59,900. This is 59,600. But the correct value was 59,900. So let us change. The closing inventory is 59,900. 59,900. So once you adjust that, it now balances at 81,850 and 81,850. Now we can now move to the adjusted trial balance. Adjusted trial balance. Now the formula that we did yesterday again, I want to start it, and that is what I'll be copying. For items on the debit side, you start with an equal sign, Then use end year draft trial balance, end year draft trial balance, or end year draft trial balance. So this one is not an item on the debit side. So a minute, this one is not an item on the debit side. That was a cash at bank, which was an overdraft. So it's a credit. So it's on the credit side, equal sign 12 to 50. Go to the end year draft, get this correctly, plus go to the adjustments and click on the credit side. You add whatever is on the credit side. Then still on adjustment, you less whatever is on the debit side. That is for the items that will be found on the credit side of the trial balance. Enter. Then you know this is 500. This is an item on the debit side of the trial balance. This is cash in hand. So it will be equal sign. Click on the 500 on the end year draft trial balance, plus go to the adjustment and click on the debit side of the adjustment, then less the credit side of the adjustment. Now those two formulas will help you throughout. We had our formulas here. The next item under consideration is trade receivable. So trade receivable is an item on the debit side. Knowing that trade receivable is an item on the debit side, then it means you use this formula here, the one that had cash in hand. So you copy, Control C, then click here, you paste here, Control V, that gives you 17,100. Then trade payable is an item on the credit side. We use this other formula, the one for cash at bank, Control C, then payable will now be pasted here, Control V. So that's adjust that to 14,200. Then after payable, we have land. Land is a debit item. So we'll be using the formula for receivable. So land is now 110. Same to building at cost, just drag that. Accumulated depreciation, you use the other formula, credit formulas. Then furniture at cost, you use this formula here for the debit total balances. Accumulated depreciation, you use the formula on the credit side for accumulated depreciation. So Control C, Control V. Then we have the other item that we have is inventory. Inventory is on the debit side. Use the formula for debits. So this is inventory. Then share capital, you use the formula for credits. Control C, Control V. Then share capital, from that you drag all the way to 10% long-term loan. 10% long-term loan. Then we have also retained earnings that will be moved down for retained earnings. Distribution, we use the debit formula. The debit formula here. Debit formula, then that will be dragged all the way to this part for interest on loan. Sales, we use the credit formula for sales. Then purchases, we use the debit formula for purchases. Depreciation, this is revaluation. Revaluation, we use the credit formula for revaluation. Depreciation, we use a debit formula. Depreciation, accumulated depreciation, the credit formula. Copy and then paste. Then after that, adjustment. Our adjustments are different. You don't use those formulas that we have up there. And for adjustments, this is a credit balance, equal sign this. Then this is a current asset. Just pick it the way it is. This is a liability. This is on the side of asset. You drag together with the other income tax. This is a one for the other side. Then credit loss, debit. Expected credit loss is also on the debit side. So that's how you do that other part. Then you readjust your formulas to pick everything again. So just drag down so that it picks everything, drag across. that should balance automatically. Now, with this, let us get the profit or loss items. Now on to the profit or loss items. And again, you will guide me through as we navigate through this. Cash at bank is not a profit or loss item. Cash in hand is not, trade receivable is not, trade payable is not, land at valuation is not, building is not, accumulated no, furniture no, accumulated no, inventory yes. So opening inventory is a profit or loss item. So that is a profit or loss item. Share capital is not, share premium is not, 10% bank loan is not, retained earnings is not, distribution yes. So distribution expense is a profit or loss item. Then all those from depreciation moving down, admin, operating, dividend, yes. Motor vehicle is not. So motor vehicle is not. Interest on loan is a profit or loss item. That is interest on loan. Sales, yes. Sales is a profit or loss item. Sales is a profit or loss item. Purchases is a profit or loss item. So purchases of 120, 270. Then we move. Now from purchases, there is revaluation. Depreciation, yes, is a profit or loss item. Depreciation is a profit or loss item. Then go to adjustments. Closing inventory cost of sale is a profit or loss item on the debit side. No, on the credit side. This one should be on the credit side. It reduces the cost of sale. Now the other closing inventory is a current asset. So that one is a current asset, goes to the statement of financial position. Accrued admin, no. Prepaid, no. It's already adjusted up there. Remember, current liability, current asset. Income tax, yes, of 15,600. That is the income tax. A current tax, no. The way it is, it's not. Because it's a current liability. You only pick the income tax expense, not the current tax. Bad debt, yes, of 1,700. Then lastly, expected credit loss, yes, of 1,900. That's an increase, which will be an expense. Drag across. It is 405, the other side is 410. The difference is profit for the year or retained earnings for the year. So we'll be saying retained that. This is 410, this is 405, which means the difference is retained earnings for the year. So this is retained earnings for the year. Retained earnings for the year. Now, retained earnings for the year is the balancing figure, which means will be debits, total debits, minus total credits. Total debits minus total credits. Star, meaning it's the balancing figure, and we get it here. Equal sign, click on 410, minus sum, tab, then select from 1900 moving up. From 1900 moving up, that is what we are summing. Sum of that to the end. Close bracket and enter. And that returns 5610 as our balancing figure. That will be statement of financial position items. Cash at bank is on the credit side. So that is cash at bank, which is 12,250 credit side. A debit side 500, that is the cash in hand. The one that follows is trade receivable, debit side, trade receivable. The one that follows is on the credit side. That one looks like accumulated. That is trade payable. Then the one that follows is land. Land was revalued up. That is land. This is the 140 looks like what? 140 was furniture and equipment, that is 140. Let me zoom so that I can see everything. After 140, there is building, that is building, then accumulated depreciation for building is 20. 100 was on the debit side, and what was 100? 100 was furniture and fittings. Then the other side, on the credit side, is accumulated depreciation for the same 35. Accumulated depreciation for furniture and fitting. Furniture and fitting. Then inventory was used. Opening inventory was used. So move down, leave the opening inventory. What we have next is share capital. This is on the credit side. Drag it down all the way to 10%. At 10%, even the retained earnings supposed to be included as well. So drag to retained earnings. So all this distribution, no. So distribution is SOPL, admin SOPL, other operating, dividend SOPL, motor vehicle. Motor vehicle is here at 73. Motor vehicle, interest on loan, no. It's an expense. Sales, no. Purchases, no. Revaluation, yes, of 10,000. Revaluation. Depreciation, no. Accumulated depreciation, yes, of 14,600. Then adjustments. Closing inventory cost of sale, no, but closing inventory current asset. So the current asset is 59,900, the closing inventory current asset. Accrued admin current liability, yes, that's a current liability. Then prepaid current asset, yes, 21 on the current asset side. Income tax expense, no. Current tax, that's a liability of 1,700. Then expected bad debts written off, that one is not put here, it's an expense. Finally, expected credit allowance, no. We have retained earnings for the year, which is 5610. So that is the only other item that you bring on board. That is all. After that, this should balance automatically. You just drag across, and that is not. So the current tax is wrong. Current tax is wrong. This one should be equal sign. Then thank you for that. 15,600. That is the current tax. Then it returns 542,600. So that is how it balances with 542,600 after correcting the items that were wrong. So this was the final. I think the question really finished us. This is the final question for Safari. The original end year draft adjustment, adjusted trial balance, profit or loss items, and also the financial position items, duly balanced, showing the retained earnings for the year and also totals for debit and credit. So see you in our next session.